Alright, so welcome to another video for the daily bias. Right, let's start off with the daily chart as usual. So for bond futures, we have formed a bearish fair value gap right here. So to me, it is very likely that we are going to go down this week to take out the stops over here. These are relative equal lows, and I'm actually interested to see if it can overextend down into this low, because we still have an old low right here which we are gravitating towards. Okay, but I've already drawn the dealing range. I'm looking at this dealing range right here, and I'm looking for price to trade back into at least 50%, and I think that is going to be offered tomorrow CPI. For today, I think it's just going to be more of a consolidation for CPI to attack the liquidity, right, on both sides. For ES, yesterday did not reach into 50% of the dealing range prior to the run higher. As anticipated that we are still bullish, so I am going to pull the fips right here, the dealing range right here. So right now what we can see is that this 50% falls in line perfectly with this fair value gap. I'll be interested to see if price can come back down here during CPI and then expand higher. Right now there is no stop hunts taken on the 4 hours, so I am not looking to chase this move over here. It's pretty much going to be the same for Nasdaq and YM. Right, pretty much the same. For Dow Jones, it traded back all the way into 50% and then displays higher, but it hasn't taken out this high. This high was not taken out yet, so maybe just today it might do it, but the main event is tomorrow, so I have to be a little bit more patient. Yesterday is Monday, which is why I was okay to take a trade, because we still have like a buffer, like a 1-day buffer prior to CPI. But right now it's Tuesday. The likelihood of us having a very good price action is very low. For Euro and GBP, they are still trading within the same range as Friday. It's an inside candle on Monday, which is anticipated because you can sort of anticipate it because we do have CPI on Wednesday. So the markets are all hinging on that event, and then after that event everything will become very clear. New Zealand dollar, same bias here. Let's take a look at the 4 hours. Right, so the 4 hours actually formed a CISD right here, but the problem is right now it's Tuesday, so it becomes a low probability trade idea, even though we have established that framework yesterday. You have to take it day by day basis. And then for Australian dollar, same thing, because today is Tuesday and then tomorrow we have CPI. You have to disregard whatever you have whatever you have done in terms of framework from the previous day, because things can, trade out of your expectations due to manual interventions. Alright, so let me just go through Australian dollar futures, because we do in fact have a trade set up yesterday, right? So the trade setup for yesterday was that we reach into 50% from this low to whatever high there is, and then this candle right here provided the 50% retracement. Dropping down into the 15 minutes, this was that particular swing low, and then we got the CISD right here when price closed above the opening or the body of the down close candles. The reason why I did not take this trade is because I wasn't in front of the desk, unfortunately, and then I was trying to capture the move higher, but eventually it subsided because we're getting close to 12 noon. For Forex, I try, or should I say, I don't really like to enter after 12 noon because it becomes very quiet during the PM session for the currencies. So currencies usually are best entered during London or in the early session of New York. Okay, and then over here we can see a very deep reversal, like a strong reversal right now into deeper discount. So this right here would be a trade, but of course we have to wait for a return into 50%, right, on the lower time frames as well. So from here, this swing low to that high, price came back down into 50%, and I would think even 62% as well. Let me just double check. Yeah, 62% OTE retracement, and then to go higher. Even if you have put your orders at 50%, which is just below the midnight opening price right here, you would have gotten your 2R right over here. Alright, so this would be a very simple trade that I could have taken if I'm in front of the desk, but unfortunately life got in the way. I wasn't able to take this trade, but we move on, right? We move on. Okay, so next we have Japanese yen. We can clearly see that price is respecting bearish PD arrays right now. Look at how we closed the Monday candle. We traded up into the bearish order block prior to the displacement, and then right now we are keying off that order block to send the price lower, taking out swing lows right here. So this would be the second swing low that price has taken out. The first one was right here. I think for this particular asset, it's going to gravitate towards this low, and then maybe something would change, right? Not really too interested in yen futures right now. Canadian dollar, same thing over here. It reached into discount of the daily range. Right, we have the 4-hour invalidation right here, but notice how it did not show any willingness to displace higher or even close above down close candles. This is the main down close candle that I'm looking at. It's a series of down close candles, and you can regard them as one single bullish order block. So price was not able to close above, and then instead it went lower. So I think the sell side right now, it's much more probable today, but I'm not interested in trading this because I am higher time frame bullish. I have no reason to go looking for shorts, especially prior to CPI. And then for crude oil, we are trading higher into 62%, but overall on the higher time frames we are neutral. Remains to be seen what price wants to do. Just stay on the sidelines for this particular asset. And then for gold futures, we are disrespecting bullish PD arrays. Over here you can see that there is a bullish fair value gap. So right now we have formed a bearish fair value gap on the daily. Okay, so over here we have a very clear balanced price range. I'll be waiting to see if price would like to close above and then we continue to trade higher, or do we want to look for more discounts, or is it maybe just like a higher time frame consolidation. A lot of scenarios right here, which is why it's better for us to wait for CPI to provide the move. Let me just double check from this low to this high if there is a retracement of 50%, because if there is no retracement of 50%, this might be the target for price before higher. It's gonna be OTE retracement, because right here this particular swing low is just below the 50% of the current dealing range on the daily time frame. Okay, and then let's take a look at the weekly. Yep, it makes a lot of sense on the weekly as well. Have taken out a short-term swing high right here after trading into a bullish fair value gap and down close candle. So yeah, it's very reasonable for price to trade back into 62 prior to a run higher up here into new all-time highs. So how would it look like if we plot the OTE? Let's double check. OTE will be way down here. That's gonna bring us to the last down close candle prior to this expansion higher. Alright, so let's see. Everything, I mean, we still have a lot of possibilities on the table due to CPI, so not going to rush things. And that is it. Basically, this concludes the daily bias for today. We are going to be neutral for most, if not all, the assets for today. I'm not going to put on a very heavy bias because it's prior to CPI, so stay safe. All right, keep your ammunition for after CPI, because everything is going to become crystal clear and things are easier to trade after CPI. Alright, have a good day, rest well, and prepare for the rest of the days, rest of the week, which is Wednesday, Thursday, Friday, whereby you might get some really nice moves to end the week. Thanks for watching, and I'll talk to you again.